Hello, traders. It is Sunday evening, September 13th. I'm doing some market analysis to try and prepare myself for the week ahead. Let's start with the market. You can see how we had that buying climax that I'd been referencing and a very swift decline. That's because bullish speculators are getting flushed out of their positions, so usually that first pullback is very sharp and very quick. What we'd like to see after that is we'd like to see a nice bounce. We'd like to see asset managers who felt that they missed this rally instantly come in and gobble up shares. And when they do, you see a nice gradual climb higher. We didn't see that this week. We had a little bit of a bounce on Wednesday and Thursday morning. We tried to get through the high from Wednesday and it didn't happen. In fact, we saw some really heavy selling. We easily took out the low from Wednesday and we tested the low from Tuesday. Okay, Friday, 9/11. Actually, there's an interesting statistic on Friday. 11 out of the last 12 9/11s have been bullish. It's a little bit of a patriot rally. I think that that kept a bid to the market on Friday, or we would have been right back at it and selling. Now, Friday, you can see how the market came down and tested the 50-day moving average very easily, and we took out the low from Tuesday and Thursday. I view that as very bearish. Why? Because asset managers who should have been buying stocks if they had an appetite for them would have been in there nibbling and nibbling to try and see how strong that offer is. But at the first opportunity, sellers were smacking bids, and that's why the market instantly dropped back down. That tells me that the price action is very negative. So for the rest of the video, and I'm going to try and keep it brief, I'd like to focus on the short side. If you are a swing trader with a longer term time horizon, say 3-4 weeks out or more, you should not be looking at anything that I'm about to tell you. You should be in cash. You should be waiting for that market pullback. This has been a very, very strong bounce off of the low in March, and we're in a 10-year bull market rally. So if you are a longer term position trader, your best opportunity will come off of a market decline. Once support is established, then you can go back in and sell out of the money bullish put spreads. The video that I'm doing tonight is for day traders and for very, very nimble short-term swing traders. I cannot emphasize that enough because I know a lot of people who've been out there gnawing at the bit to buy longer-term puts. I don't believe the market's going to be in a longer term market decline. I don't see anything right now that suggests that. Valuations are a little bit rich at a PE of 23, so there is room for a pullback. So, in that vein, here's what I'll be watching for this week. This 50-day moving average was the low from Friday. Now, you can see that it comes into play at SPY 331.65. So the first caveat to any trade that I'm going to be showing you tonight is that the SPY must be below the 50-day moving average. Market first, market first, market first. If you do not have that technical breakdown in the market, then you should not be buying puts on stocks. Plain and simple. I'm not going to beat that dead horse again. The market must be below the 50-day moving average. Now, why don't we just buy puts in the S&P 500? The reason that we're not going to is because we find relative weakness within the market. We want to find stocks that are going to lead the sell-off, and they are already showing some cracks in the dam. And that way, if the market goes down below the 50-day moving average and it pokes right back above it, the stocks that I'm about to show you are likely to continue to drift lower because we've already seen signs of selling pressure. That's how it works. And if the market does pop back up above the 50-day moving average and it closes, that means you look at the market in the last 5 minutes of trading, and if the SPY is closing above the 50-day moving average, you want to stop out of your put positions. What we want to see is we want to see that breach below the 50-day moving average and follow through. Ideally, a close on the low of the day. And then we want to see follow through the next day. I believe that SPY 324 could be a support level that we test in the next week to 2 weeks. Outside chance that we get down to the 100-day moving average, which you can see comes into play around SPY 315. That's another support level that we want to be watching, but we're a long ways from that. So I want to go in and I want to find some stocks that are weak relative to the market. Let's use the custom search engine within Option Stalker to find some good candidates. Obviously, if I'm going to be trading options, I want to make sure that there's good option liquidity. So I will use a rating of 3 to 15. Now, these are going to be very nice liquid options. You'll be able to get in and out of the position fairly easily. Friday, the market closed just a little bit lower. You can see that in the chart here. Small bearish day. And I want to make sure that the stocks that I'm about to evaluate closed below the prior day low. That would suggest to me that they were quite weak on Friday. Then I'm going to go in and I'm going to take a look at stocks that had heavy volume. Well, I'd like to see the stock moving lower on heavy volume. Next, I'm going to make sure that the stock is weak relative to the SPY. You can see that variable right here, strength versus SPY. Go all the way over to the D1 column, which is daily, and we mark that box. So that would be bearish if I mark the red box. Finally, I'm going to be looking for a bearish trade signal on a daily basis from the one option system. So now I've got all these criteria marked, and I'm going to click scan. And those are my results. So I'm going to go through these and I'm going to show you some stocks, but I want to keep this video fairly short. I've already gone through, I've clicked through the candidates, and I'm going to show you the ones that I feel set up the best for a drop on Friday, or excuse me, a drop on Monday, and these will be candidates for you to consider. So I'm going to move this off screen, and the first one on the list is Apple. You can see the relative weakness in Apple. I'm going to put up an indicator called 10SI, and I'm using 10 periods, which is the default. And the orange line below zero is a sign of relative weakness. Well, you can see the long red candles. You can also see this upward sloping trend line on Apple. I believe that could be tested. So if I were going to be shorting Apple, I've got to make sure that the market has that technical breakdown below the 50-day moving average. And in this case, I'd also want to see Apple below the 50-day moving average. And that comes in at 108.75. If Apple closes above that moving average, or if the market closes above its 50-day moving average, you've got to stop out of the trade. But Apple does have some nice selling pressure on it right now. You can see the action from Friday, how the stock was trending lower the entire day. Apple is one that I think you're going to want to take a look at come Monday if the market is weak, which incidentally, right now the S&P 500 futures are up about 15 points. That can change before the open tomorrow. So next I'm going to go down the list. I'm going to take a look at CHWY. You can see here that the price action was very, very soft on Friday. A lot of relative weakness. And I'm going to go into the daily chart. And here you can see the indicator has just dropped below zero with heavy volume. Now that A means that there were earnings announced after the close on Thursday. So the first opportunity that the stock had to trade was on Friday. And the stock sold off and it closed right on that 50-day moving average. So we have another instance here where market below 50-day moving average tomorrow, stock still showing relative weakness, stock below 50-day moving average. I like this trade. I think that it has an easy path down to the 100-day moving average. Week after earnings is a search that you can use in Option Stalker, and this stock also came up on that search. CVS, very weak. Caremark, you can see how it's been continually selling off here through this horizontal support level. It's a little bit on the choppy side, and you can see that in the chart. There's not a lot of pace with this stock, but I do like that horizontal breakdown. CVX, that is an energy stock. All the energy sector has been very, very weak, but this stock does not make big moves. It doesn't go anywhere fast. I'd like to be in a stock that's actually going to be moving lower fairly quickly, but relative weakness, you betcha on the energy stocks. And it's below the major moving averages. It's also below this horizontal support level, and it gapped down. So I think could be a nice play here. I'm going to opt for others. I'll continue to go down the list. LU, very, very weak price action. You can see earnings after the close instantly dropped below the 50-day moving average. Since then, we've had a series of long red candles closing on their low. I'm not as crazy about this one just because of that 100-day moving average. Certainly, if the market's below its 50-day moving average on Monday and the stock is below the 100-day moving average, which comes into play at 305.91, you bet I would consider LU for a good shorting opportunity. Continue to move down the list. PTON, Peloton. They've benefited from the coronavirus. They sell home fitness equipment. Sales were off the charts. So very, very good news, but the stock is pretty lofty, high price. You can see the A designating after the close earnings on Thursday. What did the stock do and how did it react? Jumped higher on those fantastic earnings, and then we got a long red candle. This is a bearish engulfing pattern. The stock reversed all of those gains, and here you can see that's where it gapped higher right on the open, and look at how steady that selling pressure was all day long. A lot of profit taking place, a lot of profit taking place on this stock, and it closed on its low of the day. So I think that you're going to continue to see weakness in PTON. How far could it possibly fall? I think this $72 level could be a target for it. Now you'll see that the orange line is above zero, indicating relative strength, but that could change with the earnings announcement and that bearish engulfing pattern. I think we're going to see follow through selling on it. And then finally, we'll go down to PayPal, PYPL. Here you can see that the stock is challenging this horizontal resistance level, now support. That was resistance. I'm going to hover over it so we can get our price point for it. And there you can see that the close was 183.23. And we've touched that a couple of times in here. So was resistance, stock broke out. Now that is a support level at approximately $183. You can also see how well the stock has been able to hold that point during the market drop. If it goes below this breakout, let's call it $183, and if you have the SPY below its 50-day moving average, this is going to be a nice short. I think it's got a decent path down to this 168 level, which is the 100-day moving average. So let's take a look at a possible option trade. If the market does break down this week and we're trading below that 50-day moving average, I think you're going to see pretty quick follow through selling on it that starts to probe deeper for a support level, and we could see a pretty quick move. Here's how I would approach it. I would assume that PYPL, with any kind of market decline, given that it already has relative weakness, that it could get down to this 170 level, which is the 100-day moving average. I want to be out of the money. I want to buy some relatively cheap options because if the market falls apart, I feel like the stock could really come in hard and come in fast, and that's going to give me an opportunity to buy a relatively inexpensive bearish put spread, a put debit spread. So I would be buying a put that's closer to the money and selling one that's farther out. And I'm going to go to the normal October 16th expiration. I'm going to look at those options and the stock options I'd be considering. I'd be looking to buy the 175 puts and I would sell the 170 puts. Now off screen, that market on that spread is 130 bid, $1.30 bid, offered at $1.95. So I could estimate that because I'd be selling this put here and buying that one, if I were doing a put credit spread, for a put debit spread, I would be buying the 175 puts and selling the 170s. So given that the market on that is 130 bid, offered at 195, I want to try and get in somewhere around the $1.50 level. Maybe I have to pay $1.70 for it. Let's say that we get in for $1.70. The stock is breaking that support level at 183, and the S&P 500 is below its 50-day moving average. If that's the scenario tomorrow, I'd like to be able to buy this spread, and if I buy it for 170, I'm going to take half of 170, which is 85 cents. I'll add it on to that price to give myself a target profit, because I'd be looking to make 50% on that trade. Don't get piggish. You have to be very, very careful trading the market on the downside. That's why I'm suggesting to longer term swing traders that they stay in cash. 1 minute your puts could look great, the market's falling apart, and the next day you could get a really nice market rally. These bull markets, they die very, very hard. So you have to be nimble. I think that trade sets up well, especially if we've got a breakdown in the S&P 500. I looked at the price action last week. I did not like the fact that on the SPY, we had a tiny, tiny bounce that barely even lasted a day. And then the sellers were right back at it and right back at it on Friday, which has typically been a bullish day on 9/11. So I think that tomorrow morning you'll see probably a little bit of choppy price action after a weekend, and then I think that you're going to see renewed selling pressure, and I believe that that 50-day moving average is going to fail tomorrow, and that you need to have some bearish candidates if you're a short-term trader, and here's the custom search that I used to find that. I'll recap it quickly. Great option liquidity. The stock closed below the prior day's low on Friday. We had heavy volume on all these stocks relative to the average 20-day volume. We had a bearish trade signal on the stock, and it is weak relative to the market. And so the stocks that I highlighted, I'll put the buy and sell signals up so you can see those on the chart. First one was AAPL, Apple. You can see the sell signal there. You can see the 50-day moving average. That's your trigger for your entry point on that. I also highlighted PTON. There you can see the bearish engulfing pattern for PTON. I think you're going to see continued relative weakness on that. There's your sell signal on it as well. What would be a good entry point for PTON? I think if the stock is easily taking out the low from Friday, I would get in there. I'd use that price point as my stop also. CHWY. And again, the fact that it's had a very poor earnings reaction tells me that there could be more selling. Same with CHWY. That was another short. Here our trigger is the 50-day moving average. Stock needs to be below that. LU was another one that we looked at. That needs to be below the 100-day moving average, with the S&P 500 below the 50-day moving average. And then finally, PYPL. And I gave you a little bit more of a perspective on that. 183 is the trigger on that, with the market below the 50-day moving average. You've got to stop the trade out, though. If we get a close back above the 50-day moving average on the SPY, that means that we're bouncing again and that the market's going nowhere. You need to make sure that we've got that breakdown and that there's follow-through selling. Then the stocks that I showed you will perform well. That's all I've got for you tonight. Look for a little bit of selling pressure this week. If you like the content of this video, please give it a thumbs up. Make sure to subscribe to the YouTube channel and turn on your notifications so that you never miss one of these videos, because I'll always have some great trading ideas set up for you. Thanks. We'll see you tomorrow. Thank you for watching this YouTube video. I'm Pete Stolzers, and I'm going to keep the trade ideas coming along with lots of education. So make sure to subscribe to the channel and please turn on your notifications so that you never miss another trade. If you like the content, please please give it a thumbs up. I've loaded 2 other videos that I think you're really going to enjoy. Stay tuned. We'll see you soon.